In today's video, I'm going to be diving into three leaps that are setting up nicely for the week ahead. I'll walk you through my analysis, strike selection, and show you which leaps to enter so by the end of the video, you're all ready and prepared to take advantage of this opportunity. Let's go. Hi, my name's Gautam, and on this channel, I talk about the stock market and achieving financial freedom with the power of options trading. So if you enjoy content that can help you retire early and achieve financial freedom, don't forget to hit that like button, subscribe to my channel, and share this video with your friends and family. Also, if you are new to the options world or are simply looking for one-on-one guidance to help you shortcut years of trial and error and avoid costly mistakes, click on the coaching link below and I'll be honored to help you out. My first pick for this video is SoFi Technologies. And if you look at SoFi is up nicely 68% year to date. And then if you look at the last 6 months, it's actually up 153%. Coming down to SoFi's revenue breakdown, 56% of SoFi's revenue comes from its lending business. So if you check out SoFi's website, that would mean new home loans and refinancing existing home loans. We obviously have the private student loans and the student loan refinancing, all of which should see a boost in activity and revenue for SoFi, with two more interest rate cuts projected, one later in October and then one for December. If we see the CME FedWatch tool, we have almost a 95% chance of a rate cut at the FOMC meeting later this month in October. And if you look at the December 2025 FOMC meeting, we right now have almost a 85% chance of an interest rate cut. So if both of those interest rate cuts proceed as expected, that should help SoFi's bottom line and provide a boost to its lending business. In addition to that, SoFi continues to be innovative, just like Robinhood, launching its options trading platform recently. And SoFi's goal with the options trading platform is to engage users already on the SoFi platform so they don't go to another place. SoFi is able to successfully convince its existing subscribers to start using its options trading platform. That would be an additional source of revenue for SoFi in the time ahead. If we look at SoFi's 6-month chart, it's trading very close to the bottom of the Bollinger Band and also its 50-day moving average. So in my opinion, it's setting up perfectly to either sell cash secured puts on SoFi at this level or to open a leaps play. Now, if we talk about cash secured puts, I actually already have a position at the 2450 strike price, which is exactly the bottom of the Bollinger Band. I have a small position where I sold 10 put options at the 2450 strike price. And then for this, I collected a premium of about $1,000. And then this is expiring October the 31st. So if SoFi falls under 2450 by October 31st, I'd be very happy to pick up some SoFi shares at the 2450 strike price. We have strong support at the bottom of the Bollinger Band, and that would give me an opportunity to ride it back all the way to $30. So talking about a leaps play, I would go out at least a year. I like this January 15, 2027 options chain. And generally, when I like to buy leap contracts, I target a delta of anywhere from 70 to 80. So let's look at some strike prices in that range. We have a 67 delta that has a lot of open interest and volume right here that I like. I also like the 77 delta, which is actually a strike price of 20. This also has a lot of volume and open interest. So if I were to get into a leaps play on SoFi, I actually like the 77 strike price. Obviously, SoFi is at $25 right now. So I'd recommend going with the $20 strike price, and that's a delta of 77. So that provides us some additional cushion in case SoFi were to fall back to that level. My next pick is Palantir Technologies. And if you look at the Palantir chart, it's up 116% in the past 6 months and up 127% year to date. Now, obviously, we had a pullback this past Friday, and that was on the news that the US Army mentioned that there are some security flaws in the Palantir system that they're using. Now, right after that, Palantir pushed back against those claims. No vulnerabilities were found in the company's platforms, and the findings were mitigated immediately. So obviously, I don't think that's the end of the story. So we'll see how this plays out in the week ahead. Looking at Palantir overall, it's still a pretty fundamentally strong stock. In fact, if you look at its quarterly earnings, the revenue has been rising consistently, with Palantir hitting almost $1 billion in revenue and keeping a nice net margin of 32%. Also, very interesting is these numbers right here. Palantir only has a debt of 237 million compared to a free cash flow of 531 million and cash of a 938 million. So it is positioned pretty comfortably to not only take care of its debt, but any issues that arise in the normal course of business. So keeping that in mind, let's pull up the 6 month chart. So looking at where Palantir is trading right now, which is the middle of the Bollinger Band, I would see how Palantir plays out this coming week, and I would either sell some cash secured puts at the 151 level, or if Palantir does end up getting to the 151 level this week, that would be a great place to enter into a leaps play. So again, to enter into a leaps play, I would select the January 15, 2027 options chain again, which is about 467 days out. I like this 160 strike price, which is a delta of 70. And as you can see, this has a lot of open interest and volume. And then I also like the 150 strike price, which is slightly deeper in the money. And then this one is a 73 delta. Now, keep in mind that is based on the current price, which is $175. If Palantir does end up dropping to $151 or close to the 150 mark, which was the bottom of the Bollinger Band, then you should look at the appropriate strike price anywhere between the 70 to the 80 delta at that point of time. My final pick for this video is Amazon, and Amazon obviously needs no introduction. And looking at where Amazon's trading right now, it's currently in between the middle and the bottom of the Bollinger Band. Now, because the bottom of the Bollinger Band also coincides with Amazon's 200-day moving average, it's a strong level of support. So I don't mind selling some cash secured puts at that $214, $215 level. In fact, I'm okay going out just a week. And the 215 strike price is a delta of 29. Again, keeping in mind those support levels, I don't mind going aggressive with a 29 delta. And then obviously that's also a great return on your capital. If I go with the 215 strike price, I would collect a premium of $178 selling one cash secured put on Amazon. Now, if Amazon does continue to pull back this week and gets to the $214, $215 level, then for a leaps play, I would again go out at least a year. Again, I would stay with the January 15, 2027 options, which is 467 days from today. If I look at a 71 delta, it has a lot of open interest and volume. In fact, it probably has the most open interest and volume. This is a $200 strike price. And then, this is basically a $20 discount from the current level. And then, if you want to go deeper in the money, I also like this $180 strike price, which is a 79 delta. Again, this has a lot of open interest and volume. So depending upon what works for you and what works for your account size, I would choose the strike price that works best for you. So that's it for today's video. If you enjoyed it or learned anything useful, please be sure to hit the like button, subscribe to my channel, and comment down below with your thoughts or any questions. If you would like one-on-one coaching directly with me, click on the first link in the description below, and I'd love to help you out.